Hello everybody, this is Toni Turner and welcome to the Market Now as of the market's close on Friday, November 16th. Well, the U.S. dollar weakened and Treasury yields slid today after a top Federal Reserve official said U.S. interest rates were near a neutral rate, while the S&P 500 ended positive after a seesaw session helped by optimism over U.S.-China trade ties. While the Fed is widely expected to raise rates in December, the number of hikes next year is now a matter of debate. And on that maybe positive news, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the tracking stock or ETF that closely follows our S&P 500 index. On this chart, the red line is the simple 20-day moving average, the green line is the simple 50-day, and the black line is the simple 200-day moving average. Now, as you all know, the SPY is trying to heal now after the dramatic fall it has taken since October the 4th, when it fell to $259.85 on October 29th, which was 10% or correction territory below the all-time closing high that was established on September 20th at $293.58, or about $29.35 on the S&P 500 itself. Now, since then, we've had quite a time. Since that fall down, the S&P has rallied back up, come up to about $281, about 2,800 on the S&P 500 itself, then fallen back down. Some people have noted maybe an inverse head and shoulders pattern, although since it made the new low quite a bit lower than the other one, this is kind of a weak pattern right now. It fell this past Thursday to $267.01. We'll call that $267. Then rallied again today to close at $273.37, which is about $27.37 on the S&P 500 itself. The trouble is it's still trading below the 200-day moving average, and that line is now coming in at $275.78. So again, it looks a little weak. The RSI is neutral here. The MACD line and the signal line are coming together under the zero line, which is just a very slight negative here. So to rescue the index from its current doldrums, buyers need to jump in and take it back, take the SPY back, I should say, to above the 200-day line. Now, because it's still below the 200-day moving average, again, that comes in at $275.78 as of today's close. Since it's still below that line, I hesitate to enter new long positions unless it's a really great opportunity. And if I do so, I will enter only with small position and firm stops. Now, as I have mentioned before, November, December, and January are typically the most profitable trading months of the year. Of course, we're a little over halfway through November, and it's just been quite a wild ride. But we got a late start. This October fall here, I suspect, was a little late in coming. So at any rate, we'll have to stay tuned to see if the market can get a little jollier going into the holidays and see if the SPY can trade back above the 200-day moving average and stay there as we head into the holiday season. Our next chart today is a chart of the Invesco QQQ, used to be the PowerShares QQQ. As you all know, the QQQ represents the Nasdaq 100, a very important index in our market. Of course, it has in it some of the top tech leaders, the likes of Facebook, Google, Amazon, Netflix, Microsoft, Intel, that whole group, and Apple, of course. The QQQ did make an all-time closing high back here on August 29th at $186.76 As you know, it fell from there and it made a low on October 29th at $160.09. Then it rallied, then it fell again to this Thursday's low at $163.46. The Qs tried to move a little higher today. Today the Qs closed at $167.50. Kind of looks at the present moment like the Qs is losing its mojo just a little bit here. Of course, it's trading below the 200-day moving average, just like the SPY is. And that 200-day moving average is coming in at $172.27. Of course, the 50-day is way up above, potentially acting as a ceiling. Now we have to see if the QQQ can rally. Perhaps not in the coming week, as the coming week may be slow because of the Thanksgiving holiday, but perhaps rally the week after Thanksgiving. We want to keep an eye on support down here at 163 right here, and of course down here at 160. If it cannot climb back above this 200-day line, or if it falls further, I will definitely become more conservative with new positions, as I said before, and I'm going to get more defensive still. We could see a rally in the weeks to come, so we're just going to have to stay tuned and watch this progress. The good news is this prior low Thursday was a higher low from the prior low back at about 160. So a higher low is always good news. That does mean that buyers have come in here and held it up, at least for the time being. So that is good news. So keep an eye on the QQQ. It will be an important indicator as to which way the broad market goes. Now let's go on to our final chart for today. This is a chart we haven't looked at in a little while. This is the Healthcare Select Sector Spider Fund, the XLV. Top components in this fund are Johnson & Johnson, United Health, Pfizer, Merck, AbbVie, Medtronic, Amgen, companies like that. And in this healthcare ETF, just wanted to tell you, included the industry groups are pharmas, healthcare providers, healthcare equipment, biotech, and life sciences. So it is quite a large range of healthcare companies. Now on October 1st, at $95.62, the XLV made an all-time high. Then it fell with the market, with everybody else, came down to October lows down here of about 86. Notice how, unlike the SPY and the QQQ, the XLV fell below its 200-day moving average 3 days in a row, but each day it rallied back up to close higher than the 200-day moving average, which is now coming in at $86.91. Now, when I captured this chart today, the XLV was trading at $92.04, just below the 50-day moving average, which comes in at $92.17. Now, again, this could be, it isn't yet, it could turn into an inverse head and shoulders, which is a very positive pattern. But in order to do that, the XLV has to come up here and trade and close above and break above $93.70 in order to do that. So I'm going to keep an eye on the XLV in the coming weeks. Again, with the next week potentially being a quiet one, the XLV may stay a little range bound here between 86 and 93.50 toward 94. But if it perks up in the coming weeks, and if it can come up and stay up, I'm even going to say if it can stay above $89 here and then keep climbing higher and stay above that line and gain some strength, some volume, some buyers, I may become a buyer myself and add some shares to my portfolio. My initial stop will be a close below $88.90. Excuse me, if and when the XLV starts higher, back toward its all-time highs, I will definitely adjust to a trailing stop. So you may want to keep an eye on the XLV in coming weeks to see if it remains positive. And now for the coming week's economic reports. But first, please join us this coming Monday, November 19th, for our next session of Toni's Market Club. If you're not sure how to approach the market right now, let us help. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a very low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic report. It's going to be a kind of a shortened week this week, as you probably know. Monday, not much going on in that arena. Tuesday we have housing starts and building permits. Wednesday, all of the other economic reports are crammed into this day. We have durable goods, jobless claims, consumer sentiment, crude inventories, and natural gas inventories. Of course, the market will be closed for the Thanksgiving holiday. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Minute.